and gentlemen, welcome to the 11th episode of the Futurum Equities Podcast. You got myself, Shay Boloor. We got the legend, Newman. Markets are roaring right now. Powell finally wasn't the Grinch. He surprised everyone in Jackson Hole. As soon as he opened his one-liner in the first seconds, market just boomed up. Were you surprised by his dovish stance? Because I know a lot of people, especially the media, they were angling for hawkish. We did not get that.
Yeah, I would put it among some of the lesser surprises. I don't know about you, but somebody I know sometimes goes by Danny Dimes, whatever that was, tweeted like on Monday, right? The market was falling apart. We had that kind of 2-day, 3-day sell-off. AI is a bomb. Chamath is doing a SPAC. We should have made that the title. I mean, that might have been like peak potential top. OpenAI's 500 billion val. The world's about to end. And what did I tweet? I said, stay calm. Rate cuts are coming.
Nailed it. That's exactly what's about to happen. Yeah.
Look, here's the problem. I mean, the economic data is just not reliable. And I've said this for a while, like if you're shopping and you're out there, you cannot tell me the inflation right now feels as bad as it felt a year or two ago. You can't tell me it does. Things like gas, energy, food, everything had gone through the roof. And then, of course, there's all the stuff like lumber, building. It was crazy. And now I'm not saying it's come down. I'm not saying like everything's great. I'm not that guy. I'm just saying it's not rising like it was anymore. And so we're getting these numbers saying it's hotter now than it was, but it's like, I don't think anyone believes it. So if that was Trump's goal of the BLS and the firing and his constant, he's actually achieved the goal now. He's made it very hard for the average person to believe the data they see. And by the way, we get those continuous revisions. We get revisions to GDP numbers. We get revisions to employment numbers. We get revisions to inflation numbers. And the revisions are always quietly more significant than the original numbers. They're never in the right direction. The revision's always like, oh, there were more unemployed people than we thought. Oh, GDP was less than we thought, right? Bottom line is that the pressure's been on Powell for a while. Now we got one of his potential Fed board members that's going to be under investigation for fraud. He's got others leaving. They're going to be replaced. He's already kind of a bit of a dead man walking. And I don't think he wants his legacy to be Volcker. I just don't. One last thing. Can I say one last thing here? There's no way we can actually return to fiscal normalcy. It's not possible. The entire fiscal policy of the United States now is all about fast growth. We can't have a situation where people can't buy homes, they can't buy cars, they can't use their credit cards because of obscenely high interest rates, because the average person saving $1,500 a year on a mortgage or a car payment will put that money back into the economy. The average impact of that 0.5% on maybe inflation across goods, it's nominal in terms of people's day-to-day expenses. That bigger check will get pumped back into the economy.
Well, I think you're highlighting a really important point that I also want to touch on after seeing Powell's Jackson Hole speech, where you sense the reset or some kind of regime change happening on his tone and what he's going to do going forward. On Wednesday, literally 2 days ago, we got the July Fed minutes that came out, and that message from those minutes were very clear. Inflation risk outweighs employment. That meeting happened before the jobs data got released and after we got those revisions on May and June that practically erased like 250, 260,000 jobs like in a matter of seconds when those revisions got released. So that made the July print look even worse. So this wasn't just a miss though on data front. Like it was the beginning of the first crack on in what the Fed had been calling a resilient labor market when you've been communicating this like firsthand experience. It's not as resilient as people anticipate, especially what the Fed's saying. So I think that's why today mattered so much, because Powell stood in Jackson Hole, and for the first time since the tightening cycle began, he effectively signaled that the Fed is done treating inflation as the only risk that matters. He said, quotes, I think it was like the shifting balance of risk may warrant adjusting policy. That's a direct acknowledgement, in my opinion, that unemployment is now at the front of the conversation. It's going to have a much bigger weight in their outcome or whatever calculus they're going through to decide what to do on the Fed cut, and also teed up for a near 100% likelihood that September is going to be a rate cut.
And remember, PPI came out, and that was sort of another warning signal that we might have more inflation. So he's basically willing to turn his cheek on some of the inflation risk right now because he's seeing the job risk. But overall, like I said, the Trump thesis is the important part, in my opinion. His thesis is that an economy grows faster when people are mobile, meaning real estate has to be buoyant, it has to be appreciating, and it has to be affordable. We cannot interest because most people can't buy a home. So meaning like pushing rates up to some level that actually breaks housing prices to try to make housing quote unquote more affordable. But if mortgage rates are 8 or 9% versus like, hey, would you rather buy the $500,000 house with a 2% mortgage or a $420,000 house with a 9% mortgage? And the bottom line is the 500 with a 2 when the average person's putting 10 or 20% down. And on top of it, all this higher for longer that we've had hasn't broken housing prices. So we've actually built this whole system. It's just fundamentally broken right now. And so you have a choice. You either assert growth, which is what, Secretary Bessent has been saying pretty much since Milken, when we were in that kind of Liberation Day free fall and we were starting to find our way out of it around that time. Remember, you and I got together. That was a day we took our photos and we were going to launch right? That was the moment in LA, that turn was all about basically saying we're putting our foot on the gas. So we're all gas, no brake. That's where the economy has to be because we don't have the discipline in Congress. We don't have the discipline in society to spend less. Nobody, not Republicans, not Democrats, nobody wants to spend less. Elon Musk went to Washington. He tried to fight that fight. We can't even get people to agree, Shy, on getting rid of fraud. We're like, no, we'll just keep it in place. We don't even care. It's paying for some nonsense in our community. What? We gave $6 billion to set up electrification in California and never did anything? Hey, we're not even going to check to see where that money went. We don't care. Just keep going. Foot on the gas. We are the F1 society of the world, but we have no other choice.
Yeah, I also do think on that macro front, you're right. And on the structural front, we just got evidence that the breadth is improving on a lot of stocks catching major bids today, but not just that, the earnings cycle was very strong for a lot of the hyperscalers this past couple weeks. Like it was, in my opinion, an inflective quarter where you finally saw some real ROI on AI based on the earning beats that we saw from the Microsofts, the Googles, the Metas. Like they weren't even close. They destroyed their bottom line. Revenues were still beats, but I'm saying the bottom line earnings expansion was wild to see. That has always been the main argument for us. Why, fine, maybe the multiples look a bit expensive if you use traditional metrics on today's reality, but going forward, it's going to be a massive levers that are going to be pulled from AI that's going to be less expensive, more top line revenue. Exactly.
Inflationary. Hey,
and
seriously, by the way, everybody that's watching this that wants to know if we're going to talk about next week's NVIDIA earnings, since we're not having shows next week because Shai's off getting married or whatever. Shai's getting married. Just know that there will be a special drop NVIDIA focused from us. So hang tight. There is a special Shy Guy getting married drop. You might or may not be really there, but we're going to share it anyway. Where we took 20 minutes and dove into NVIDIA. But maybe this is a perfect kind of point to pivot, Shy, here and talk a little bit about, okay, so policy just got favorable. SoFi, very important, just went over $25. But no, a lot of things are ripping. Assets are ripping on this news. But we also did have a bit of a scare this week. I mean, you can't say that on Monday, Tuesday, when you start, especially that opening, I think it was Tuesday. Was it Tuesday, the opening, or Wednesday? One of the openings this week. It's all been a blur for me, where the market really dropped hard. I mean, things were down 8-10%. People were making calls on Palantir. There was this big Palantir short thesis that came out. OpenAI had the $500 billion valuation. Chamath had a SPAC, and people are like, it's the top. We are going down. I mean, talk about that a little bit. Like, because you and I actually tweeted, or we both have tweeted and we text each other back and forth. We're like, this isn't necessarily that bad. Like a little cooling, not a bad thing. You know, everything's kind of ripped. How did you feel before the Powell news? And like, are we in an AI bubble either way in your mind?
First off, to answer the last part of that question, no, we are not an AI bubble. I think we just had an inflective quarter in AI, and I think the runway is massive. I think that there was some froth the past couple weeks that maybe needed to get some Momo traders out. I think I've been saying very actively for the past couple months, the risk on rally won't be over as long as NVIDIA and Palantir continue going up to the right. They are the barometers of the risk on appetite because they are AI. Stage 1 AI, NVIDIA. Stage 2 AI, Palantir. As soon as we saw Palantir actually start fading aggressively, not just like, 5% move, like it was 20% in a matter of a week based on a short report that was ChatGPT created that was just absolute lies. Like, so, it was so bad, these lies, where they were saying that the consensus CAGR was 23%, when if you just look at what Wall Street's estimates are, it's 35% across the board for the next couple of years, CAGR-wise. So they either just trust the hallucination, the ChatGPT that they use, and just didn't even QA it. Also, that their strengthened argument on that short report was because this company A is valued at this much, company B should be valued at this much, when they aren't even correlated. OpenAI is not doing what Palantir is doing. Maybe eventually they will be fine, creating this decision engine inside these LLM models. Like, I feel like eventually, but it's not going to be the scalability or Switzerland of what Palantir is trying to do. But regardless, different points. Databricks was the second.
Funny though, can I just say something about that? Like,
Yeah.
it's so funny because like the first thing I tweeted is I'm like, this is the dumbest comparison. Like, it is so dumb. Like, first of all, you got a company growing at what, a rule of like 80, 90?
95. Yeah.
Rule of 90 plus that's in enterprise. By the way, solving the biggest challenge. Now, we can argue about how much of what Palantir is doing is sort of consulting versus platform. But this company is printing cash. It has a deep integration and contracts inside of the government, and they've already started displacing a whole stack of competitive software inside of those companies, inside of those entities. And on top of it, it's growing and profitable. Like, how are we comparing this? It's like, it would be like trying to, compare NVIDIA to OpenAI. And it's like totally different businesses, okay? Bottom line here is that I'm not saying that Palantir isn't slightly overvalued for the moment. It is very defensible to make that suggestion. I wouldn't stand in front of the train if I were you. But having said that, like, that comparison was so dumb, I couldn't read the rest of the report. It was like, I'm going to compare ExxonMobil to AMD. It's like, okay, but why? I mean, one's in the energy business, the other makes chips. It's like OpenAI and Palantir is enterprise versus almost an entirely consumer play. It's based on one having all open source data, and the other one's based on entirely using the most private, secure data on the planet to do analytics. It's just different.
I think a better comparison almost is Robinhood's worth $100 billion. SoFi is only worth $25 billion. That's why it should go lower. Totally different parts of the fintech ecosystem. So, like, it was a lazy report, but
I do want that was a dumb comparison too, by the way. Those two.
It was awful, but I do want to talk more about Databricks though, because Futurum dropped some fire content this week.
Yeah.
That highlighted Databricks. And I think that a lot of people don't really know much about it because it's a private company. But now when you have Citron saying Databricks is the stage 2 AI winner and they're only worth 100 billion, Palantir's 400, that's a disconnect. Want to talk more about Databricks and also what we just launched at Futurum this week?
Yeah, I think it's super important. And I published this, posted this, and you did as well. But Futurum has launched a new Futurum Signal. It's the evaluative reports that we do. And our first one was the data intelligence platforms. And among our elites, we did a comparison of, 10 or so of the largest. And then we looked at about 50 more smaller companies. But it's a fully AI-powered, forward-looking, autonomous evaluation. And I believe Databricks scored in the elite category, outclipping at least 8 of the others. And it's just doing an amazing job, including it went above Snowflake. So I think Databricks, by the way, I think you're on the cap table, right? For full disclosure. Yeah. I mean, I think that IPO is going to be absolute fire. Can't wait for it to come out. Company's doing great work. And we'll drop a link and an image below if you're out there over the next day or so, because I know we're live, so we can't do this in real time. If we were fancier, maybe we could have. But check out all the data intelligence platforms. You can see where everything landed. These, by the way, Shai, we're going to have 10 more of these signal reports dropping over the next couple of months. We're going to have them for cloud platforms, agent platforms. And so both as technologists and as investors, this is really great, quote unquote, signal for making investments, because these are forward-looking evaluations.
Yeah, absolutely. I also
Appreciate that, by the way.
Oh no, of course. We just got some breaking news on and get your input on. Apple has reportedly explored using Google Gemini AI to power their revamped Siri. Shocking? I don't think so, because I know this is what we've been talking about for months here. But what's your immediate takeaway from that news story?
God, I just turned away. You say Intel?
No. Apple has reportedly explored using Google Gemini AI to power their revamped Siri.
Just kidding. Oh my God. Another story of Apple not being able to do AI? Are you serious? No? Okay, I read the story. Look, I literally can't figure out how Apple can be this bad at doing this. But here's the other side of it. So if I want to be more rational about the whole situation, like Apple has used Google for search for a long time. Like Apple didn't go down the path of building search into its browser. You search in their browser, it pumps up Google. They push Google. It's a huge contract. Google pays them a fortune for it. Maybe that's the same path. Maybe that's the same path they're going down, is like, look, we're not going to be able to do AI. We're going to stay as this, application store / device community. And we're just going to skip this whole thing. I mean, I'm being a little sensational because they also announced like they're going to get into physical AI and robots. But what I worry about is how the heck are they going to skip? Like they couldn't do cars. They've totally bombed so far on VR. AI has been a disaster. And like, how are you going to do humanoid robots when basically you don't have an LLM? Like, what are they going to do? Like a humanoid robot with Google's Gemini inside of it? Why wouldn't Google just do that? And so I'm really, by the way, like, there was a point like where I was kind of enjoying piling on, and now I'm just kind of starting to feel sad about Apple.
Do you think they're just going to turn to a services company and just like everyone else will just own everything, but we'll have the app store? That's essentially what they've been doing, and now they're kind of maybe going down that route until they can figure it out what to do. Because right now, I think the Apple issue was they didn't believe in the velocity of AI. Clearly, that's what happened there. They believed it was a real thing, but they thought maybe it was years out when it was really months out. And now they're playing catch-up trade when nobody really wants to work there because they have no visionaries there, because everyone who is a stakeholder there have been working in decades. And when you work somewhere for decades and not innovating like the way Apple's been innovating the past 20 years, you become complacent and you become really comfortable being in that comfort circle you've been accustomed to. So you don't feel the need to stick your neck out when your AirPod division makes 4x the revenue that OpenAI does. Why bother? But I think we're seeing signs now on that AI velocity is very real, and it's not just going to be a blimp. It's going to be a permanent structural shift in society, and seeing how great of an impact that's going to be. Apple's playing catch up. And how do you play catch up in a race? You acquire enough talent in R&D to get products out there. I just said AI brains don't want to work there. They want to work for Elon, Zuck, Sam. Not there. Next one, partner. You do the partnership route. That's what Uber's doing for AV. Apple's feel like they're doing the same thing on AI now. So,
but they really always have. I mean, I guess that's why. Yeah. But the difference is they've always, at least when it comes to like some of the core capabilities. I mean, how the heck does generative AI work when you're always calling another service in? Meaning like Siri. So the problem I have is like they've got to fix that, because the thing is like if you really think about where their platform becomes so differentiated, Shai, is it's when the platform becomes totally ubiquitous. And the ubiquitous is like, I'm walking down the street, I've got an earpiece in, my phone is here as a visual, I talk to it, I tell it what it needs. It's not going out and having to navigate which LLM and service through another API, another application. It should just all be there. And by the way, sometimes you will navigate this mixture of experts. It will bounce between a different thing, but like it should be transparent to us, the user. So right now, when you use Siri and it needs to do any sort of meaningful AI, it's like, oh, you want us to go off to ChatGPT? It's like, come on, for real?
No, It's crazy because you're seeing everyone just need to be control the stack internally. Everything has to be controlled end to end. There's a reason for that. It's the only way to maintain quality assurance or the quality of all this AI that's going to be going forward. You have to have everything in house, and you're going to be eventually stuck if you don't go down that route, because eventually you're going to hit your head against the wall. And if you think capitalism is brutal right now, in the agentic AI future, it's going to be catastrophic. It's going to be vicious, Wild Wild West, Mad Max like environments where people are going to go after each other. We spoke with a couple like people that live on Stats Avenue. They've been saying gloves are off right now. That's the mentality for everyone in this new digital economy. So like, I think it's disappointing. I think that Apple trading at 35 times earnings it's solely based on them having a massive device moat that eventually they'll have to figure it out. But how much time how long of a leash do you give a company? That's the question, where it's been years. They're at the same point they were a couple years ago. And you're seeing all these AI native customers or clients, companies become bigger and bigger and bigger. Like we just saw $500 billion for
What's
OpenAI.
the div? Is it like, is that why people are staying in it as sort of like a safe value growth? I don't even
I think
remember.
it's 3%. Let me see.
But I'm saying, like, there were a lot of people, like investors, mostly boomers at this point, that made a fortune just buying and holding Apple forever, right? And I think they've got a lot of, sort of provenance in that story, buy and hold Apple. I mean, Apple, it does still have time. It's not over. But I mean, maybe this is a perfect moment, though, to sort of flip to another company that's spending recklessly, ruthlessly, or maybe super intelligently, and that's Meta. Because like Apple's on one end of the spectrum, like they're partnering, they're not spending anything. They don't seem to be building infrastructure for AI. Now, again, this is not saying they're not doing things for phones and stuff. We're just saying they're not doing things that sort of set them apart for what I think is the future. Now you got Meta, which, by the way, stories break this week. Seems like maybe kind of FUD, but it got verified. Like there was a story, it got verified that Apple's maybe pulling back, or sorry, not Apple, Meta's pulling back on some of the expense on its super intelligence efforts. But then Andrew Wang, their CEO, the one that came in through Scale, came out this morning and tweeted basically like, no, we're spending more than ever. So talk about like, playing with the emotions of the people. And by the way, I feel like the world wants AI to be a bubble. Like people really want it. Like the media really seems to kind of want to push that narrative. They want to understand like what can happen that NVIDIA, what can they miss that could really, and like I keep saying, if they miss, they'll capitulate the whole market. But Mark is playing, I mean, the joke about 4D chess, but like I said, spending billions to make trillions. That's the strategy that Mark is doing right now. Now, can he succeed? I don't know, but can 3.3 billion daily users across Meta platforms that are already monetizing AI? So they have that moat, that deep, high-performing cash machine in their business right now. And then over on the other side, they're saying, we don't want to lose the race to super intelligence. We're going to spend an absolute fortune to hire among the few hundred most talented people in the world. But I did say, and I had a bunch of media this week on this, Shy, and I said, like, look, even if they are pausing a little bit on personnel, maybe it's because, like, look, you just bought like 5 of the best players in whatever your favorite sport is, right? This was when they put LeBron and Dwayne Wade and Chris, whatever his name was, on the Miami, Chris Bosh on the Miami Heat, or they go triple max contract, because it's like, look, you just spent all that money. We got to see if we can win a title here. I think there's kind of like, we've got all this talent. We got to start putting them in the right places, putting them in the right positions, start working on the right projects, start to see if we can get this behemoth model to break through, because Meta has fallen a little bit behind there. Like they are sort of been out of the conversation for a little while about whether their models are keeping up with some of these frontiers. But I don't think they're slowing down like in any permanence. And also, I like your take on this, but like I think he learned something from the metaverse experiment he did. When he went all in and basically committed, his stock got crushed. He didn't communicate about sort of how he was investing. He just said, we're going to spend, like it or not. I believe in this trend. We're going all in. And the market absolutely punished him. He returned to some sort of semblance of fiscal responsibility and operational, and the market, what's the stock up? I think like 700% since that time.
Mhm.
I think he's smarter now. I think he's being a little smarter and saying some things that are potentially right. But I think the media just wants to cue it up as it's some sort of breaking point in AI, and it's not.
No, yeah, especially I agree with everything you're saying right there. I think I made that post this week. I mentioned here I'm reading the post right now. Media calls Meta hiring pause the end of AI. Seriously? It's ridiculous because all Meta was saying was we went to the grocery shop. We went grocery shopping. The fridge is full. Let's cook what we have before buying more. But for 2 straight days nonstop, the media has been spinning it as household in crisis, food shortage imminent, is eating officially over. Ridiculous. And I think that right now that's part A. Part B was the layoffs that were happening in a lot of the AI. Was it in the AI division, the layoffs? I'm trying to remember. I think so. So I think that was a misconception of what was actually happening, where it wasn't cost cutting these layoffs. I think that Zuckerberg's been very adamant that progress has been minimal from Llama to Llama, the innovation front on each of their LLM. So now Zuckerberg's just ripping out the layers of middle management so that engineers can sit closer to the product owners. And that does 2 big things. Now engineering intensity goes up the funnel directly, huge on product speed, because now decision cycles shrink from months to weeks. And I do think in the super intelligence race for AI, speed compounds and is everything. Like that's why that acquisition hire, the talent acquisition hire for Alexander Wang's company, I forgot, Scale AI. He could have acquired the whole thing, but he did 49% because he wanted them to work at Meta the following week. If he had to go the traditional M&A route, it would take months. It might get pushed along because of monopoly status, who knows what. So that's why he went down that path, because speed is everything right now. He can't afford to slow down.
Yeah. But let's be clear, like these big companies are basically just putting their middle finger up to the to the SEC and to others that are doing regulation on mergers and acquisitions. They're like, we don't need to buy the technology or the company. We just buy the people.
Yeah.
And there's no way to stop that. Microsoft did that with Inflection. And that was when they brought in Mustafa Suleyman. He's now the head of Microsoft AI. They literally just acquired the talent. And so right now, the scrutiny and regulatory of being able to acquire an entire company, these startups don't have much revenue. They just have information. They have ideas. They have IP. And it's super valuable, but it can be bought really inexpensively. You just give people paybacks. It's brilliant. And these companies are making brilliant moves. Or like what Satya did by buying 49% of OpenAI. That was a deal, didn't need any review, didn't have any scrutiny. I mean, gosh, what do you think it would have had now if that deal was trying to be done? And by the way, you know what that 10 billion that he put in for 49% up to AGI is worth now?
Oh, it's ridiculous. It was one of the most
250 billion. He's 25 times return. He took 10 billion, turned it into. It's worth more than AMD. His investment is worth like an AMD now.
So there's some breaking news that happened here as well. Wow, what a hot Friday it's been. President Trump will be announcing U.S. equity stake in Intel today. That's what the conference is about.
There we go.
What's your take on that? And do you think it's going to change anything about Intel?
Did he announce it? Is it official? Is it official?
He's about to on today's news conference.
How do we know that? How do you know that?
It got leaked by. I'm trying to find out which source. But anyway,
10% stake. 10% stake. Look, I mean, I've been all over this. It has to happen. Had to happen. We need to be able to make U.S. to be able to make and manufacture its own leading edge chips. We have to have diversification. We can't be beholden to Taiwan. It also gives us more control in our negotiations with China. Right now, we've been completely beholden. And by TSMC is the greatest company maybe in the world, number 1 on the Futurum AI 15, huge outperformer. Nobody can make anything right now of scale without it. And it's a wonderful company. I'm so glad it's bringing 2 nanometer here. But now it has A16. It has future nodes. That's all sits in Taiwan. We have to have the leading edge IP here. This will buoy it. I think it'll actually bring more investment in. And now that the government's in, this is where I start to see the fast follows. You'll see investments, even potentially from some of the other fabless companies. Like I could see NVIDIA making an investment now. I could see ARM or SoftBank furthering its investment now, because I think, by the way, SoftBank is angling because ARM is going to make AI chips that ultimately Intel will make the AI chips for ARM. So
for sure. I agree with that.
Because they won't be able to get enough CoWoS. They won't be able to get enough supply. If they get to any scale, they're way better off doing this with Intel. So this always makes sense to me. And the last thing I'll say about that is, like, look, I would rather, as a taxpayer, have the chance to get paid back. Non-voting shares in Intel held by the U.S. government makes sense to me. Because if it succeeds and it becomes a juggernaut, or even just becomes a really successful foundry, guess what? We'll get our money back with returns. You know what? One of the best money-making things we've done in a long time was when we seized Sam Bankman-Fried's freaking assets, because all that crypto that was in custodian ended up paying a huge return. The investors actually got more money back than they had paid from them. So sometimes when you actually make an investment, intentionally in this case, into something that is important, okay, and that has real potential, not automotive, not banks, into something that actually truly is defining the future. But if you believe in the AI trend, why in the world would we want to be 100% beholden to Taiwan? That's insanity. Even though they're friendly and they run a great company.
Yeah, I mean, I agree with the national AI security component too, but I think that it's really important for listeners and potential investors to understand that this does not solve all of Intel's issues. I think the problem with Intel isn't about money. We've talked about this on the show. It's execution. Like, Intel's newest chip process only works about half the time, when TSMC's works 90% of the time. So AI and machine learning is already difficult enough. We just mentioned minutes ago, speed is everything in this AI race, and it compounds really aggressively, and people are willing to spend up for it. That's been Intel's biggest downfall, where they have a TSMC problem, and their next chip, Panther Lake, is delayed, I think, and the one after that is on pause until they get a big customer, because the products just don't measure up, in my opinion. What's your take on that?
Yeah, we got to be careful not to cross streams, though, because you have chips that Intel makes on TSMC's nodes, and then you have chips Intel makes on its own nodes, and then you have Intel as the design company, and their design business is actually incredibly profitable, independent, but they desire to try to stand up this foundry, and the investments that are being made has crushed its margin. Don't get me wrong. It doesn't mean their market hasn't been eaten up by AMD. And of course, they missed the NVIDIA market altogether, largely. I mean, so a lot of mistakes were made, no question about it. But if you just took out, they still have like 70% market share of both CPUs and data in the data center and on PCs. After all this, they still have like 70%. It's not impossible to make a comeback from here. But this foundry thing was absolutely crushing the company. They don't have enough capacity. They couldn't depend on their own foundries. They couldn't depend enough on TSMC, and they were losing margin by going to TSMC. That's not, when you have all that overhead cost, you don't want to be like, hey, I have 3 cars, but I still need to go rent one, right? Like, so it didn't make a ton of sense, but this makes a ton of sense. It was the right thing to do. It's the right thing for America. It's the right thing for the world. And I genuinely believe this. And again, I think if President Trump wasn't the president, because nobody cared when we took stakes in the banks, nobody cared when we took stakes in the insurance companies. I mean, some people, but largely everyone was like, got to save it. Too big to fail. Like, how about not having the next smartphone, the next PC, or the next AI server because we can't make it? How about having China beat us to the race to the most advanced technologies in robotics because we can't make the chips here? You want that? Because if you don't want to see us have that supply chain resiliency, then you're basically begging for us to be disrupted.
Do you think this is like the first step in finally spinning Foundry out of the Intel umbrella?
That could be, but I don't know.
Like this is how you force, because I think that there's a lack of corporate governance faith right now in Intel, because they've just missed something so in your face for such a long time, that if they spun out Foundry, TSM got involved, NVIDIA got involved, the US government was involved, brand new board of directors, brand new, like, who knows what CEO hotshot would be behind that. That's a different story. And that would become somewhat of a growth angle if they weren't anchored by their legacy side of their business. I think that'd be a really interesting, like an ASM, like a USMC, for example, it would be called and just be Intel's foundry. Like that would be exciting. I think a lot of people would be up for that. Yeah.
Yeah. And by the way, I've said that along the way. Like, it doesn't have to be Intel, but we have to have a US foundry network, and there's no other choice but Intel. So it could be Intel could spin out, Intel could have even a firmer firewall, Intel could have outside investment that requires full split governance or a full split. They could raise money, they could have a JV where TSMC could have a minority stake. All these things are possible. But what we can't do is not control the IP. We cannot be in a situation where we don't control the outcome. So that has to happen. I'll fight to the death. I'll argue with any of you on Twitter or X that want to argue with me. But I'm not willing to bet our future at 100% on Xi Jinping staying stable enough to not invade Taiwan and not take us down from having the most advanced technology that we need here in the United States.
I mean, I agree with that as well. I just maybe because right now in the market, I didn't even want to call the last week a dip. It was, again, a 48-hour dip. And I think we're about to hit all-time highs after a lot of people front ran a potential hawkish PAL that we never got. And I think that next week's NVIDIA print will be dominant up to the perception of the market, but it's going to be really strong hard data that shows that AI party is going to start. Where do you go now with your new capital, infusion of capital, if you put some capital on the sidelines? Because we're entering seasonality weakness. We didn't get the hawkish Fed that we thought. Earnings were so.
You think?
That was the overwhelming sentiment, I think, was hawkish Fed. And I think it was
follow me for more right information.
I also think that there was also more weight behind it because Trump announced a conference today all of a sudden last second. So it looked like, all right, hawkish Fed, Trump will try to save the day before the weekend. We just got double full. Like, I think now we're getting US is going really hard in AI, and we got the hawkish Fed. So now it's like, where's the next opportunity? It might be an Intel. It will be because they have the bones. Yeah, they have the bones in place.
Tons of upside.
Do something.
And now basically you'd be betting against the government. You'd be betting against, like, once the government's in, like, how much would it be willing to commit? Like I said, I think they can put their thumb on the scale to push some of the other fabless companies to use Intel. And so I think it gets buoyed here. I think it goes up. I think, it may not all be right away, and it got a bit of a boost on the Masa. But again, I see ARM as a customer for sure. Intel, of course, is its own customer. And I see every one of the major fabless, like the NVIDIAs and AMDs and Qualcomms, all wanting to at least have some of their designs optimized for Intel, just for security, just for the safety of it. So, they have to have the resiliency. And again, part of the limitation, the rate limiter of how much AI and the AI chip volumes and stuff in the future is going to be it's CoWoS, it's energy, it's packaging, and it's energy, it's wafers. So the more capacity that can be built out, the bigger the AI market can get. So, if we believe it's going to get bigger, then that's something to stand behind. I'm very bullish on it. Like I said, I advise the company. I'm not invested in it. I don't have a position. But if you've followed my tweets, you'll see I have quite an opinion about it. So
let's talk about another AI beneficiary that you spoke to their management team this week. That, again, before we get into this, Futurum AI 15 will be rebalanced in the coming weeks. We're going to be doing it every quarter after we get earnings season, because guess what? I mentioned that AI velocity is explosive. We have to update our latest and greatest top 15 beneficiaries off it every 3 months because things change. There's a couple names that will get off this list when we republish it, but one name that might be potentially hopping on the list, it's Nebius. Daniel, you spoke with their team. What are your thoughts on Nebius?
Nebius is, by the way, what a cult name. Wow. Like, this is one of those names that, like, people are incredibly passionate about. It's Yandex's background. I mean, a lot of people, I don't know if they realize it came from a Russian company that was in the space, and they, re-domiciled and then went public on the NASDAQ. and have been absolutely caught fire. Just right moment. I mean, look, this is if you don't think CoreWeave is the answer, Nebius, that's become the trade, right? It's like a CoreWeave or Nebius. That's the play. But what I like about Nebius is that it's focused on solution and having add-on services. So whereas CoreWeave is really about scale capacity, like they are just volumes of compute, and they have tons of kind of, tons of NVIDIA, like basically Nebius is kind of focused on how do we add value to the capacity. They don't have the volume, they don't have the size, they don't have the footprint, but they are kind of looking at how a company will actually implement enterprise AI, for instance. And they are really thinking about how do we build solutions to help enterprises move faster. So I look at that as a differentiator, because AI is really hard, and enterprise AI is even harder. And so if they can kind of be a solution with infrastructure, there's a real value add there, and they start to create real meaning to that sort of serverless, in terms of that sort of neo cloud category that makes them, very compelling. So I like the story, but I'll also say this: I'm not a shareholder. I still think that there are other plays that I like better.
I think Nebius is a very interesting high risk, high reward AI infra play. I think they've become the single most intriguing non-US AI infra play in the public markets. Like you mentioned, they have a cult following. It's justified because if you're bullish on AI, especially infrastructure, this would do really well. I think they've effectively, like you mentioned, I think it was Yandex was their Russian name. They've rebuilt themselves outside the remnants of Yandex, and I think they're trying to rebrand under a CEO who has even been sanctioned in the EU. I think there's a lot of like weird things that happen on that front, but it's just focus on the business execution on it. They're sitting at $500 million in ARR. The pace that I got there was rapid. I think you already saw this recent earnings cycle. Like there's some enterprise logos that use them. It's Shopify, it's Cloudflare, a lot of European companies. They've raised guidance. I think that they are clearly becoming less of a cloud provider and more of a grid operator of the AI compute. If you've seen what they're doing in the power, cooling, and integration fronts, and you guys hear me talking about this all the time, that's where the new bottlenecks are, and it's not going to go away. It's not the software, it's not the GPUs, it's the grid. And this is an interesting angle towards that. So I think that Nebius isn't just trying to retrofit like old data centers and put some wrapper around it and make it look cute. Like it is somewhat purpose built for this new wave of AI we're about to enter that's running into some real power grid issues. And they have some of the lowest P power clusters globally and stacking hardware design. They're doing liquid cooling, and they're doing all these energy procurements into one vertical system. That structure alone will allow it to kind of generate a lot of compute at a very predictable low cost, when hyperscalers are kind of juggling all the energy of volatility, the GPU scarcity. Like this is a really interesting, responsible way of how Nebius is doing it. I think that's there's no margins, there's no profitability. It's losing a lot of money. It's so early that I think it's going to be a decent runway of actual profitability. Like I know that they're guiding some near-term EBITDA profitability, but I don't know. The moment's so big, I'd rather it not be profitable and just capitalize as much market share as possible. But this is a great AI infrastructure story. And I think that it's something that's on my watch list on both my growth and small cap, because I think AI infrastructure is so early still. Like one comment or one fact that gets me even more bullish, that 85% of the businesses in the world are still on-prem, guys. Cloud's still even early. Like there's so much runway for cloud. I think as cloud even gains more momentum, AI is incredibly adjacent to that. So essentially in my world, the way I'm viewing it is, I'm curious on your input on this, Daniel, is if only 15% of the world is using cloud, what percentage of the enterprise world is even using AI? Very minimal. And I think that
actually there was a study, let me hold you there. MIT put a study out this week that 95% of generative AI projects in enterprises are not meeting the expectations. 95%. It's basically, you saw that?
I saw that, and I thought it was the most ridiculous take, because you know why? that tells me that 5% success rate doesn't tell me that AI is stalling, which everyone in the world was saying.
That's the read. That was the read.
It tells me that most enterprises are just deploying it in the wrong places, which is totally natural when you're in this explosive super cycle like we're in right now. Like, it's like these companies are pouring more than half of their Gen AI budgets in sales and marketing, but like all these kind of weird nuances of like top line growth, but not really infrastructure, when the real ROI is in the back office automation, like we talk about all the time, like eliminating a lot of the BPO costs, like streamlining ops and cutting in agencies, third party stuff. Like that's where all the Gen AI revenue will be, not in the S&M, but like again, everyone reads that one header 95%, but it's just in the wrong place, guys. There's levers to pull. They just have to find it, and they're in discovery mode a bit. So there's gonna be some errors. What was your take on that article?
I think you're right that we are early. I think this is a human problem in an era of autonomy in AI, meaning that like if you look at every other revolution, you look at the digital transformation, the big data, the social, mobile, companies took a long time to adapt and adopt these things. And the complexity of doing that is even further met by resistance now, because you have a technology where people are increasingly uncertain. How will it impact my job? How does this new process work? What does it look like? And I think that like this was kind of like getting dumped and everybody just expected it to instantaneously pay off. And I think that's why it does really well in consumer workflows. There's also just a lot of software rewriting that needs to be done. Like software just needs to be rewritten for AI. So what we're doing on like an LLM, like it's easy. It's super frictionless for us. We just naturally understand it. We pick up, it's like search in the new era. Doing this stuff for work though, layering agentic workflows on top of 20 different enterprise software that you might use to operate your job, how these processes work and how the agents work alongside us and how they scale. And a lot of processes just aren't complete. It's like if you actually think about like from the beginning of writing a new research note for Futurum Equities and the time that it publishes, there's so many touches. There's the background research. You could have an agent do that. There's the drafting. You could have an agent do that. There's the editing. A different agent could do that. Then there's the final approval. Maybe a human does that. And then it's sent off to maybe someone that manages the back end of the website. Well, an agent could now do that. And then it's, scheduling, publishing. It's setting up the generative engine optimization. Agent could do that. But it's like setting that, and that's just a basic workflow, like publishing something on your website. Think about like an ERP workflow that might include like a bunch of different orders to different suppliers, and then having supply chains managed, and then having it all, timed together, and then scheduling workforce for assembly and the manufacturing. Think about like a chip, like about all the parts and pieces. Like it's hard to build an agentic workflow to do all that. So there's just a lot of parts of workflows that still don't work with AI entirely. So we're seeing the stuff that's working. A lot of it's knowledge driven, but there's a whole bunch of hands that have to touch stuff, and people tend to be slow to adopt. It's been the history, and the pace of this is breakneck. So you got people tend to be resistant. You got breakneck pace. It's not surprising at all that this isn't working as well.
It's exhausting, the AI FUD. I think we mentioned earlier on this episode that it's kind of the most hated super cycle. Maybe it's because of the first time ever white and blue collar jobs will get eliminated in the first wave. Maybe it's the fear of Terminator. Maybe it's the fear of we're desensitizing ourselves to the real world, and now it's the beginning of an inflection period of everything's going to be meta. Either way, that's not reasons to be bearish on what the future is going to be. You can be frustrated on where we're at society, but like the way to capitalize it is by participating in the winners and changing your life for the better for you and your loved ones, rather than just being stubborn and fighting it and just like being the old geezer, like, oh man, I'm going to keep using my doing math paper with pen and paper rather than using a calculator.
You see my LinkedIn post or my tweet about that this morning?
No.
Yeah. So I tweeted something this morning because, when we put out this autonomous AI-powered forward evaluation, there's been a bunch of people in the industry that are like, that's not how Gartner does it. And their assessment is done this way. And it takes this rigorous process. And this is their and they're like, literally just sticking their claws into the ground and sticking to the fact that it could never be different because this is the way it's done. And so I literally said this. I'm going to read my post. I said, when people are afraid of change and disruption, they dig into the past with all of their might while adamantly denying the future. There was an era when teachers wouldn't let you use calculators in math because supposedly it was going to slow down math skills. Learning in math has evolved exponentially since then. There was a time when the idea of using Google as a research engine was considered crazy, and the expectation was you went to the library and you'd go through the books and you'd pull it out and you do citations in ALA. There was a time when nobody believed that there would be an autonomous vehicle and cars would always need drivers, and now we ride around our cities in Waymos. People said that LLMs would never be smarter than human doctors, lawyers, researchers, but just a few short years since the commercialization of LLMs, all of these professions are outpaced by AI. And there's a belief now that robots may not walk among us and that AGI is a fairy tale. And I said, soon enough, we will all find out that is not the case. I said, don't attach yourself to those that dig into the past and fear the future, because inevitably they always get left behind. And NVIDIA, for instance, they have built a platform. They will revolutionize the world at a pace that most cannot comprehend. But just because you don't understand something doesn't make it not true. I said that this morning because, frankly, I feel like all the FUD we fight is that people are so uncomfortable with this rate of change that they are rallying against it. But hope is not a strategy, people. Hoping this slows down is not a strategy. And continuing to fight the current, I don't get it. You want to stand in front of the train and short Palantir, you be my guest. You want to doubt that, a company like NVIDIA will continue to revolutionize the world? You go ahead, short it, if that's what you think. I would rather, not pick companies, and there is winners and losers. And by the way, even companies that are doing this technology, there are winners and losers. But I'd rather just get on board with the winners and stay with it and not even worry about the losers. Stay positive, stay humble, stay kind. My words to all of you.
I mean, I know we have a couple minutes left. But that's a great way to end the pod episode right there. I was motivating. I agree with so much about what you said, and also going on. Why making your life harder a bit? Where it's the same philosophy of investing. Like, there's a reason why I care so much about moats. Why I put so much more value in a company's competitive advantage over the valuation on a traditional metric, is because if you find the early winners, the Palantirs, the NVIDIAs, Cloudflares, the list goes on, the theme will just high tide raises all boats. AI is only just getting started. It's going to get more and more mainstream, more and more popular. If you find the companies that are early, that have the monopoly or has a high competitive advantage, defensible moats, you'll be fine. You'll always be fine in a way. And Palantir, it's been a long time since
we do have something we got to talk about, by the way. Just finish this thought, but we've got to talk about Viking. Because I can't not talk about Viking. I mean, I lost my ass on Viking this week, and I need to
let's talk about Viking. Actually,
you want to finish that thought on Palantir?
No, Palantir. No? I think be careful on stock prices. What drives narratives, and for first time in who knows how long, Palantir went down 20% in a matter of a week. All of a sudden, the bears came out, claws out, poking holes in Palantir when nothing has changed, nothing at all. There's still Rule 40 score of 94. They're still beating estimates by $700 million in 6 months. They're the stage 2 AI winner to own. Valuation is annoying. It's heartburn, but doesn't change anything about their competitive advantage. Have your conviction so you don't get shaken out. I'm sure a lot of people actually got shaken out at 145. And what is it right now? All of a sudden, it's at 160 in a matter of 24 hours. Like, have that conviction, but let's talk Viking.
How about turning off stop losses? Jesus, I shared a tweet about this different company called Chemocentrics. And Chemocentrics, it was an orphan drug. It was not nearly as exciting as a GLP, but they got their FDA approval. And I remember the morning it got its FDA approval, it literally had a cell on the tape where it basically dropped by 50% for just a quick second. And it turns out that like half of retail got shook out because everybody that had a stop loss. So it was trading at like $18 ahead of an announcement, went down to like $9 for like 1 second on the tape, blew out a ton of retail. And then it got the approval and it went to like $38 that day. Okay. And by the way, I didn't sell it. And it went back to 20, like over the next 3 months. Like it got sold off. And it was hilarious because then I waited like 6 months. Just couldn't understand why it was selling and what happened. And then all of a sudden I woke up one morning and Amgen bought the company for $53 a share. And so, you know, these biotech companies are like heartburn in a bottle. You know, Vikings data, there was a lot of FUD that morning it came out. I mean, people were comparing it. One really terrible take from an analyst that doesn't even cover it at Mizuho came out and said something along the lines of, it says something along the lines that it was worse on every category than Eli Lilly, but not even noting that it was a difference of a 13-week study versus like a 72-week study. And it had as much weight loss with only slightly worse tolerance, meaning it was worse. I'm not denying that, but it wasn't significantly worse. You're talking about phase 2, where dosing optimization can still be done in future phases. And by the way, at the lower dosages that had really high efficacy as well, the tolerance was much better. And this is when we're also on top of all that, Shai, that you had a 20% adverse side effects from the placebo. So you also have a group of probably millennials that think they're getting sick when they take a sugar pill. So it's hard to know these days with things like tolerance, but what we do know is this is a pill. It seems to have the highest efficacy of all the companies trying to do a pill. They lost the most weight in the shortest period of time and showed relatively good tolerance after a couple of weeks. It was like 5% adverse after if you made it on 2 or 3 weeks in that period of time. And so the company got, what did it get? 43%. It sold off that day. It went from like $43 or $44 before it opened at $24, $24. Got absolutely destroyed. So what did I do? Well, first of all, I hold a big position of common, lost hundreds, thousands of dollars that morning of paper value. But I did the same thing I did with Chemocentrics. I wrote puts, 13.8 spreads, 23.18 spreads, and 20.15 spreads for January, collected tons of premium. Oh, and by the way, I knew data was going to drop, Shai. So a week before, I closed out all of my previous spreads. So I took all the profits on all my spreads for pennies. And then I'd also sold covered calls because, you know, all the price targets, Shai, on these stock was over $100. They were paying $2 premiums on $145 January calls, sold them back for 10 cents. Took my profit in a matter of like 3 or 4 weeks. So did really well on the profit, got crushed on the unrealized gains. But guess what? Still own all my shares. Data's still good. And I still think this company is getting bought out.
Yeah, I mean, nothing really changed on my front. My whole thesis was never, is it going to be better than Lilly or Novo? It's like, if they're going to have a market share, they're going to have a slice of the market share. And I think that's, the data did not get me out of that thesis at all. It was, like you mentioned, at 13 weeks, I think Vikings oral weight loss already beat Lilly's top dose over the same time period without plateauing. I also think that the clean safety, they had clean safety in the 30 to 60 milligram range. I also think that this is just a classic example on there's a temporary dislocation created by misinformation and overreaction to discontinuation noise. The management's going to frame the data properly going forward. I don't know if they probably already have when they talk to all the sell side research. The biology is working. That's all you have to care about. The path forward is very clear. They have manufacturing capabilities. And I just think that Viking just didn't run a long, slow titration like Lilly or Novo did. So they pushed higher doses quickly and knowing it was an experiment. And the market just read that far more than it should have. So I think the safety looks fine at the doses that actually mattered. And the company is well capitalized now with minimal burn and the manufacturing capability to actually scale, even if they don't get sold off. So I think that
company has nearly $1 billion of cash. They can keep going.
Yeah, until
well, they also, by the way, have
a
very, very tolerable injection version as well.
Yeah, exactly.
It has the same profile, but this is not one of those cases where, like, I think a lot of people have almost treated this one like it's a lot of those biotechs, though, Shai, where it's like if they fail in a phase or if a phase doesn't work out, it's basically they don't have it's end game. It's liquidation. It's buyout for penny on the dollars for IP. They can go back to the drawing board here, but here's the thing: they don't need to. They need to work on dosage optimization. They'll run another study. but I'll make a bet for everybody out there. I still think this thing gets bought out. I think it will get bought out. This is totally a bet, not investment advice. I could see it being at over $80 a share, just based on the cash and the IP, and it could be well above that. I mean, the premiums on $145 calls in January before that test data came out were $2.20 at peak when it was trading at 40. And so, I mean, all I'm saying is that the analysts, by the way, about 10 of them came out and reiterated price targets at $100 and above. You talk about getting in, people want to make money and they're always like, well, I never get the opportunities. It's like, you got to have a stomach for it, because biotech is not tech. It's not communications. It sure shit isn't value and staples. But like, biotech has a shitload of alpha. And if you're willing to, hold your nose and go through the pain, I think all of my best wins in my entire portfolio career have been in biotech. The biggest wins.
It's the most binary outcomes. That's why you win big or you struck out, and you've been hitting 100. So we are at the end of the episode, guys. We're past the time, and number
no rules,
11.
Yeah, I gotta go.
Number 11. Appreciate you guys hopping on. Market is looking like it's going to close at a new all-time high. Things are rosy. Maybe there should be some bears to take notes to look further out on what's happening. What are you gonna say, Daniel?
You guys, just say something before you leave. First of all, everybody out there, send a big shout to Shay Boloor. What's the name you're gonna take in your marriage? Are you guys gonna do like a hyphen? I'm just
hyphen.
Are you really? Okay. Mr. and Mrs. Shay Boloor. Next time you see him on the pod, he will be married. And please congratulate my partner here and my incredibly awesome co-host on the show. I mean, what a guy. Hopefully you've all been making money with him. Lots of exciting news coming from Futurum Equities. Some may even drop while he's away. And unfortunately, I can't slow down just because he's enjoying an incredibly important moment in his life. But I just also want to say, if you are watching this and you want some more alpha or some more opinion from me, tune into Bloomberg today, 3:30 Central Time. I will be on the close.
Let's go. Exciting times. Well, yeah, unfortunately, we didn't get to talk much, but next week's a big earnings week. So get some R&R this weekend, guys. Be prepared. Next week will be a volatile one. See you guys next time.